Thank you for listening to this video today. We're going to talk briefly about some recent changes to the FHA mortgage and some other mortgage programs. Obviously, there's been a lot of changes across the board due to the recent economic changes and impacts due to the COVID-19. But we're going to go through some of these things. If you would join us, our phone number again is 904-810-2293, and you can visit us, of course, at coasttocoastlending.com. First, let's talk about the main FHA guidelines and changes. I want to start by saying this video is being recorded in April 2020. So anyone that's listening to this video 3, 4, 6 months or a year down the road, these changes, this probably will not apply. We suspect that the changes we're seeing happening right now are probably going to be temporary until the economy reopens again, and really all the fears are have died down regarding the COVID-19 coronavirus. We suspect that the guidelines will kind of return and there'll be some normalcy again in the months to come. But for now, things are changing very quickly. And this is really with most lenders and banks across the board. We want to just highlight some of the major changes, and the first is the FHA credit score requirements. We're seeing that many lenders and banks in the past, they've had the credit score requirement for the maximum financing of 96.5%. Generally, they would require about a 580 credit score to do that. We're seeing now that most of those minimum requirements have been increased to 640, in some cases even a 680 credit score. So this is important to know. There's many buyers out there that may have qualified maybe even just a week ago, and now they will not qualify due to some of these quick, rapid changes that we're seeing really across the board. Again, these are changes from the lenders and banks. FHA writes the rules, the lenders and banks pretty much follow them. FHA's rule, their guidance hasn't really changed as far as what they require on their end. It's just that a lot of the lenders and banks, they're tightening up the guidelines internally and basically putting overlays, is what they call them, on top of what the FHA requirements are. So they have internal overlays and guidelines that they're setting in-house. And these can fluctuate really from day to day, from lender to lender. Again, these changes are rapid and frequent right now. And again, if you're listening to this video well into the future, most of these things may not even apply. So just be mindful of the credit scores and the requirements now for that. Also, we're seeing payment reserves. This is the amount of savings that a borrower has left over after they close on their house. So after they pay their 3.5% down payment, and then after they pay their closing costs, how much money do they have left over after the fact? Typically in the past, FHA did not require reserves in nearly all cases. But now in more cases, they are requiring maybe 2 months of payment reserves for certain borrowers. Again, this can be different from lender to lender, bank to bank, but we are seeing that payment reserves are now being required in certain cases. Another thing, also case by case, gift funds for down payment, and in some cases non-occupying co-borrowers, that may be limited. The credit score requirements for non-occupying co-borrowers may even be much higher than normal. So again, FHA, they do allow non-occupying co-borrowers to help qualify, basically meaning a parent can help one of their children qualify for a loan, even if they don't live in the home. So that's still permitted, but there may be additional requirements there regarding the non-occupying co-borrower and their qualifying criteria. Interest rate locks, that's another thing. The market, again, changing rapidly. Interest rates, they're all over the place right now, changing not only daily, but in some cases multiple times a day. And what a lot of lenders and banks are doing right now is they're not permitting borrowers to lock in their loan until their loan is near closing, basically clear to close, till all the processing has been done, the appraisal, the normal paperwork, till all those things have been done. Then they're allowing borrowers to lock. Typically in the past, once you submit a loan application, you can lock in your loans soon after that. But right now, many lenders, again, just because of the erratic movements in the market, they're mandating that borrowers cannot lock in their interest rate on their loan until the very end. So this could mean 3 weeks to a month after you submit your loan application and maybe your contract to purchase a home. And a lot can change and likely will change during that time frame. But in order for borrowers to get a baseline on interest rates, one thing we want to point out is if you're comparing interest rates from a few lenders or banks, it's a good idea to always do that on the same day, but it's really more important lately to make sure you do that on the same day. Again, just because things are changing so fast from day to day, and the interest rates overall for the FHA loans, they still are very good. In fact, we've hit historic low levels in the last month, briefly, and then sometimes it can go up substantially a day or two later. So it's really just about catching one of these low dips in the market. But again, it's important more than ever to make sure that you do your comparisons on the same day. FHA refinance, again, with rates hovering around that historic low level, it's a great time for buyers that currently have an FHA loan, maybe with a little bit higher interest rate, to consider refinancing. FHA does have their streamlined refinance option, limited documentation, and there's limited paperwork altogether on this program. This is strictly for a rate reduction, an interest rate reduction. There is no cash out. If you wanted to cash out equity to do a debt consolidation, that's not permitted under the Streamlined Refinance program. This is strictly just for interest rate reductions. Applicants will need a 620 or greater credit score to be eligible, no recent mortgage late payments, or you want to make sure your loan is currently not in forbearance, because that is becoming increasingly popular right now as we're going through the devastating impacts of the coronavirus. But again, credit score requirement 620, that could be different, a week from now or even days from now. So just make sure you call us. We're available 7 days a week to assist you and to kind of bring you up to date on the latest requirements. Cash out refinances are still permitted for qualified homeowners that do have equity. If you want to cash out and do a refinance, that will, of course, require full documentation, and appraisal would be required, just like a purchase loan. Right now, though, with all the changes, most of the FHA cash out refinance options are limited to only 80% loan to value. So if you're, you have substantial equity and you want to do a debt consolidation or cash out for any other reason, for improvements, home improvements or things of that nature, you can certainly do that if you have the available equity. Home buyers that have questions or need assistance, again, please reach out to us 7 days a week. You can reach Coast to Coast by calling 904-810-2293 or visit us at coasttocoastlending.com. Thank you.